Hello, everybody. I am delighted. My first ever mining interview. I have Jaime Leverton, the CEO of HUT8, and of course, Sue Ennis as well. And again, absolutely honored to be here with you ladies. How are things today? Despite looking at the market, of course, don't look at the market.
Well, you know what? Here in Canada, it's the Friday before our first long weekend of the summer. So, and it's a beautiful sunny day. So things are, if we focus on that, things are looking great.
Good. You guys are in Ottawa, isn't that correct?
Toronto,
Toronto.
actually.
Toronto, big smoke. I used to spend a lot of time in Toronto back in the 90s. I know it very well.
Nice.
So we have a large agenda. Much of this, kind of the burning issues that my audience is really interested in tucking into. So let's just jump in and roll with the flow. So first of all, to everybody in the audience, thank you so much for being here. And this is the first ever direct mining executive interview I've ever done. So very, very excited. So let's just jump in and talk about kind of common things that are on people's minds. There was a newsworthy event up in New York of a fire in a mining facility. Did you guys track that? Did it mean anything to you? I know a lot of people are kind of concerned what that may mean.
Actually, this is the first I'm hearing of it. It didn't hit my radar at all today. Sue, did it hit yours?
No, when you said we were going to talk about New York, I thought you were going to talk about the moratorium on mining there,
Yeah.
which is certainly very interesting. But no, that didn't hit my radar either.
Yeah, apparently there was some fire in some facility, knocked out some miners, but who knows? Maybe it's related to the moratorium. So let's talk about a lot of people are very concerned about kind of ESG. Everywhere you turn, it's all ESG this, ESG that. There's a lot of stuff with Elon Musk lately. But what's the best answer that you would give to a climate activist that say Bitcoin mining is responsible for the world's climate problems? And
Jamie, I'll let you start, and then I'll chime in after.
Yeah, look, it's a complicated conversation, and there are lots of really interesting facets that we can tackle. I would start by reminding the activists that may be blaming Bitcoin at this moment that it's a common thread when it comes to technological revolutions. So anytime there's a new technology that uses power where power wasn't before used, you can think of the computer, the internet, smartphones. When smartphones first came, there's always an uproar about the energy use and predictions of what that's ultimately going to do to the climate. And really, it's important that we put things in perspective because it really ends up being a conversation about value. We don't hear any complaints anymore about the power that smartphones use because everyone accepts the value that smartphones provide. So I think it's really a conversation about what is Bitcoin solving for? What's the value of Bitcoin that justifies any power consumption at all? And when it comes to the actual power consumption, it's about 11 basis points. It's a negligible amount of power on the global scale of energy consumption. It's a highly renewable industry. We publish a lot of data through the Bitcoin Mining Council that shows the renewable concentration of our industry in Bitcoin mining is between 58 and 63% renewables used. A lot of the energy used by Bitcoin miners would otherwise be wasted. And the reality is we use much less than many large industries that we could be compared to. And all of that data is available on the Bitcoin Mining Council site. And it's roughly comparable to the amount of energy used by North American holiday lights. So I think there's a lot of different perspectives here. And I think the most exciting thing about Bitcoin mining is actually when you think about the value of miners and the flexibility we have in our load to work in conjunction with grids, in conjunction with local communities, to actually bring grid stability, to bring a proper funding source for new renewable projects because we're a stable off-taker of load regardless of community demands. I think the upside potential here in a collaborative, innovative approach could be revolutionary in favor of global good, in addition to the good already being done to the to the unbanked and the people living in authoritarian regimes or high inflationary regimes across the world, which ultimately is the primary value proposition on which Bitcoin was created, again, in response to the 2008 subprime mortgage crisis.
So I
Excellent.
think just to echo on Jamie's point really quickly, without Bitcoin, the Ukraine wouldn't have been able to receive over 30 million in funding overnight when the war first started. Over 60 countries in 2021 had a decline in civil and political and financial liberties. If I am a female programmer in Afghanistan, I'm not allowed to even open a bank account unless my husband says I can. So again, to Jamie's point, if you look at the value that this technology is bringing and some of the real world problems it's solving, on top of the fact that it uses less energy than air conditioners in the US in the summer, again, we feel,
A lot
again,
less.
the
Yeah.
data is there. Yeah, the data is there, and it's on these environmental activists to do their own research. And quite frankly, just to wrap up here, I actually also think that so Bitcoin miners are partnering more with renewable grid operators. And I actually would love to see more of these renewable grid operators come out and say, you know what, yes, this is a 24/7 off taker of demand and is helping me smooth out some of the intermittency issues that come with the grid and help me continue to earn, income during down periods. So yeah, all of the above there.
Excellent. So there's a guy called Mr. O'Reilly or Mr. Wonderful, something like that. And
Uh-huh.
he once came out and
Never heard of
he spoke about
it.
kind of dirty Bitcoin being akin to blood diamonds. Do you guys buy into that narrative at all, or is there such a thing?
We do not buy into that narrative at all. I think sometimes Kevin's focused on things that are most important to Kevin at any given time. And we happily debate that with him on a regular basis.
Awesome.
Also, his so he also came after companies that use carbon credits as part of their offsetting strategy. And we did a little research, and his top two funds actually hold Alphabet and Microsoft and Verizon, all three companies that which use carbon credits as their main offset strategy. So to Jamie's point earlier, sometimes there's probably some ulterior motives at stake. But look, at the end of the day, we're all friends. It's all fun and games. And we're all here to move the industry forward.
I love the way you do that.
Yeah, and
Yeah.
I think it's important that the Bitcoin mining industry isn't held out to a different standard from the other industries in tech. Bitcoin miners shouldn't be held to a different standard from traditional data center providers or gaming companies. We should all be working together to solve climate change, and Bitcoin mining can actually be an incredibly innovative and supportive tool in that global mission.
Great.
I
I've
think.
got. Oh, sorry.
Oh, sorry. No, that's okay. We can.
Okay, I have another question, which is always kind of it vexes many people because they don't know which way it turns. So, the age-old question of does price follow the hash rate or vice versa for Bitcoin? Now, my theory is real simple. Looking at it for 5 years now or more, I always believe the higher the hash rate, the more security, the more people the network would attract. What do you ladies think?
I think it's more complicated than that. I think it has a lot to do with capital markets and capital availability, and then the time lag associated with how long it takes to actually build things out. So people secure capital, but then there's a long lead time to actually build out the sites, to get the equipment up and running. So I think it's really difficult to actually say which comes first. And the cycle, as we all know, the signal is getting more and more difficult to read as we get more adoption and more products coming into the system that are interacting with Bitcoin and the rest of the crypto community. So I think it's very much not one leads the other consistently.
I think though, the beauty of the Bitcoin design though is that it has those built-in incentivization and sort of governance systems built in. I.e., the more you invest in trying to participate in the network, the more you have at stake, the less incentivized you are to actually hijack the network, to actually do something to try and compromise the network. And the security features of Bitcoin are what make it so attractive relative to any other coin out there. So.
Very good. Now let's talk about some nuts and bolts. I always describe a kind of Bitcoin mining being very like gold mining, silver mining, it's a cutthroat industry. But one of the key factors, the key ingredients, is the cost of electricity. So, what do you believe is a fair break even point for miners to be competitive? Is it 3 cents a kilowatt hour, 5 cents, 6 cents? Do you guys look at that, and how do you are about your energy costs out there in the marketplace?
Again, there's no single answer. It depends on what point you are in the cycle. I think right now you can make an argument that new generation technology can still be profitable at, high double digit energy costs. So it's kind of, where is your break even point? What are the costs that went into it? How much is operating on the network? What's the price of Bitcoin doing? These dynamics fluctuate and move against each other based on every operation and every input that moves on a daily basis. We've seen the global network hash rate go up and down by like 30 points in the last 4 weeks alone.
Yeah. It's been crazy to watch. So, another point, there was a couple of articles out there. There's a lot of armchair analysts that think they know the mining business better than most. But at what point does mining become unprofitable, given the hash rate today and the price of Bitcoin? I know that for your business is probably around $18,000 a Bitcoin. For others, depending on their infrastructure, etc., it can be cheaper or it can be more. But how important is that to you guys? And I know there was a lot of talk as well about MicroStrategy over the last couple of weeks of getting margin calls if Bitcoin price falls. Is this something that is concerning for you guys?
Well, look, the nice thing about having a stack of Bitcoin that's self-mined, we produced it, and we've been producing it and holding it on balance sheet since 2018. So our average cost of production of our stack is obviously significantly less than what we produce for today. We don't have any incumbencies on our Bitcoin stack, so we're not at risk of a margin call. So we're in a much different situation, and I think that is one of the benefits of having miners hodl.
Yeah, and I love that. One
Yeah.
of the things I loved about HUT8 is your commitment to hodling and your grand plans for the future. But would you ever re-hypothecate your Bitcoin?
Look, never say never. We haven't sold Bitcoin since January of last year, but we did sell Bitcoin prior to that. We also used Bitcoin as collateral to secure a debt facility during the last bear market, which helped us buy new equipment to put us in a better position coming out of the last halving. So I think the nice thing about having a large stack of Bitcoin that for us has grown significantly over the last couple of years, in conjunction with a marketplace that continues to mature and offer an increasing depth and breadth of products that we can put that Bitcoin stack to work using with less risk, with less cost, and without having to sell down or
I
be
think
as
also
exposed to a margin situation.
I think also when you're with an organization that has such a strong belief in Bitcoin and a strong belief in the HODL mandate, it naturally serves and sort of catalyzes getting creative with how to get the lowest price possible. So I think I've heard on your interviews before that we bought NVIDIA GPUs around this time last year, and we're mining Ethereum. We are not holding Ethereum on the balance sheet, mining Ethereum, but getting paid out in Bitcoin. And right now, that means that 15% of our monthly production is actually less than $3,200 Canadian per coin. So, again, the HODL mandate has really sort of inspired us to get incredibly creative as to how we get there. So.
That's super interesting.
Yeah, and the other thing I would mention, because of course we have to defend Bitcoin volatility a lot in our space. All of us that are believers in Bitcoin do. But if you think about that Bitcoin that we chose to hold on our balance sheet in Treasury back in 2018 versus converting to cash, and then you fast forward to today, the purchasing power of that Bitcoin versus what it would have been if we continued to just hold it in fiat. I think our strategy over the long term has proven a good one.
Exactly, and it's been very impressive what you guys have done. When you look at how far do you look at from a planning perspective, from a strategic planning, capital investment planning perspective, and how do you map that back to halving cycles and price? Like what you said last time during the last bear market, you kind of mortgaged your Bitcoin to invest in capital equipment. How do you think about halving cycles and investments going forward? Do you think they're becoming less important or more important, or are they key to your strategic planning?
Yeah, having cycles absolutely have to be key to your strategic planning, and we have to learn from cycles of the past, but not be dependent on what's happened in the past to necessarily repeat going forward as the signals get cloudier. Um, we have a 3 to 5 year strategic plan that we revisit consistently. We've got sensitivity analysis that we're constantly running and rerunning as the dynamics change, because you can only plan for scenarios in this space, and then you have to constantly dynamically readjust. And so that's an exercise that's ongoing, sometimes on a daily basis in this market.
I think, though,
But I
overarching,
also think, sorry, Sue, I also think that that's why we, having been around since late 2017, early 18, publicly traded, we were born in a bull market, survived a bear, just went through another bull. We can decide whether this is a bear market or not, but certainly challenging market conditions at present. How long they continue, we don't know. But that has taught us to take a balance sheet first approach, to be prudent and patient and opportunistic in how we deploy capital. And I think that has certainly put us in a good position for where we are today.
big time. Jamie said exactly what I was going to mention. It's not our first rodeo. We've been here before, and we feel very confident that we have set ourselves in a position where we drive in this market and the market doesn't drive us. So we couldn't be more thrilled.
Excellent. Back to capital investments. Sometimes I view the kind of as almost like an arms race for ASICS rigs. How do you guys manage your suppliers? How do you make sure you have enough based on your plans going forward? Do you have any special relationships? And what do you think about Intel with their new chip and other types of rigs that are more efficient than older ones? And how long do they typically last? Could you help the audience wrap their heads around rig management?
Yeah, I mean, you asked about 5 questions there, so I'll do my
Sorry.
best to answer them all. First, we're super excited that Intel's coming to the space. We think increased competition and increased professionalization will allow for, over time, more consistent pricing, better standards. So we think that's a welcome piece of news into the space. Of course, I think many of you know we have a close relationship with MicroBT. Last year, as part of our diversification strategy, we launched a repair center. So we repair and maintain our own MicroBT equipment, but also that for third-party miners across North America as well as Northern Europe. So it gives us a great relationship with the MicroBT supply chain, and we've consistently deployed capital over the last 18 months into our orders. The last order we placed with MicroBT was one that delivers monthly over the balance of 2022. So we're consistently in a position where the fleet is being upgraded, but where we're not chasing large capital balloons, or in a cycle where we're caught short as far as the depreciation schedule. We use a very conservative depreciation schedule. We use 2 years to depreciate our mining equipment, and that's really to make sure we get the full useful life, and we're not in a position where we want to retire older equipment before it's been fully depreciated, and then you get into a write-down situation. So very aggressive depreciation schedule that we use, and we like to make sure we're consistently putting money into the fleet, and therefore we have different ages of equipment, but it allows us to keep that consistent refresh cycle, if you will.
Yeah, and back to that, what your capital efficiency from all the ratios that I've analyzed across all the miners is one of the best. Why is that?
I don't know. You tell me, James. You're running the matrix there.
Well, it's interesting that you depreciate your rig so fast. How long does a rig typically last? Because I've heard reports. There was a recent, I don't know, it was Fortune magazine or Bloomberg said 1.2 years. I know that there are rigs in existence. I got friends who got rigs that are 5 years old plus. Where is that line? And are the newer rigs more efficient? Do they last longer, or do they have a shorter lifespan?
So there are all different factors that go into how long the rigs can technically last. We have 4-year-old rigs that could technically still be plugged in. We've decommissioned them in favor of higher efficiency rigs. So it's not necessarily a question of life cycle. Although if you're running them in really harsh climates, like a really hot climate, a really humid climate, and you're dependent on free air cooling, it's unlikely that those rigs are going to last as long. So again, 2 years, I think, is a very aggressive depreciation schedule. We haven't pulled anything offline sooner than that, but I think your typical life cycle of how long you really want something running in an industrial scale mining setup like ours would be maximum 3 years, somewhere between 2 and 3 years, depending on the technology that's coming down the pipe.
Cool. And I always think in terms of, again, back to the halving cycle. Uh, a lot of people always ask me the question. It's like, I think people expect to live more than 100 years to say, what happens when all the Bitcoin is mined after 2140? Let's not worry about that for now. But do you think the protocol will change to make earning fees more lucrative for Bitcoin miners rather than the credit of earning Bitcoin itself? And where do you think that tipping point would be when the protocol would change, and how much, when would it be 50-50 between fees versus credit for Bitcoin? And it's a tough question, but it's one I think about all the
Yeah,
time.
it's a super tough question, and we're so early. I think over time, naturally, the protocol, if it doesn't organically shift, as it was, I think, originally expected, that transaction fees would just slowly increase over time, and then by the year 2140, they would be the dominant source of revenue for the miner. So I don't know at what point we may need to tweak to make sure that miners continue to have the portion of the transaction fees of the entire Bitcoin network that allows the security protocols to remain in place, because ultimately the miners are the transaction processors, they're the mint, but most importantly, they're the entire security layer for the Bitcoin network. And I think sometimes people don't understand just how vital a role Bitcoin miners play in the entire ecosystem.
Yeah, very good. And back to the hodling question. One of the things that enamored me about HUT8 is your hodl strategy. We all know mathematically, like I calculated, worst case scenario, if never another dime came into the Bitcoin space, the price in 2030 would be at least $150,000. Worst case scenario. That's just based on currency debasement and all that type of stuff. But for you guys, will you always hodl your Bitcoin, or will there be a time where you wouldn't?
I think here, Jamie, okay, you go first.
You're just asking the same question in a different way, which I greatly appreciate. So this time I'll let you answer it.
No, I think, where it stands right now is we are very committed to the HODL mandate because, again, based on even the modeling that you just referenced, but even if you look at if Bitcoin were to capture, we used to say if Bitcoin were to capture 2 to 3% of the 15 trillion negative yielding credit market, that would be a $1 million+ per Bitcoin price. If you look at if Bitcoin were to capture 2 to 3% of the $12 trillion gold market cap space. So there's still so many incredible, we think, catalyst events for Bitcoin to reclaim its trajectory upwards. So yeah, for now, we're very comfortable with this mandate. Jamie, I think it's safe to say if Bitcoin were to hit $500,000 or like even $144,000, we'd probably reevaluate this case. But right now, we're nowhere near or seeing any signals that would indicate that we would do that.
Excellent. Well,
as I mentioned earlier, the nice thing about an ever-growing Bitcoin stack in conjunction with an ever-growing suite of available products to leverage that stack without selling it down, I think just becomes more and more compelling. Why sell if you can hold and leverage and capture whatever that long-term appreciation we all believe is going to be there becomes.
Yep. And I'm a very big fan of what I call Bitcoin proxies. You guys are one. In full disclosure, I own HUT8. I was an early investor and I have some leap options on HUT8 now as well. Because I'm very bullish, despite the fact that everybody's underwater right now a little bit. But I do believe the future is very bright and I'm out to 2024. That being said, do you guys look at other Bitcoin proxies and do you wonder why they are underwater or selling at a discount? For example, MicroStrategy, GBTC, those types of things. Do you fall into that category yourselves from your perspective?
Look, I think it's a very, very risk off market. I was just looking at a chart of stock market outflows being at almost record highs, if not record highs. So I think it's really not about individual equities per se as just a mass exodus out of anything perceived as risky or tech, and they're not necessarily looking at the underlying assets per se. It's more about what's happening in the rest of their portfolios or mandates.
Yeah,
Exactly.
I mean, we actually started to see the risk off trades start in December. And even as early as last September, we actually had quite a few meetings with some value investors at their request. And it was really interesting to see some of their questions or hear some of their questions. They actually were saying, like, listen, if things start to go awry, like, what is your diversification strategy? What is your plan B? And that's why this timing of these data centers that we bought from TerraGo in January, on top of it just being really one of our long-term strategies for really a long-term play in space, could not have come better. We have a completely diversified new business, 400 enterprise customers, but also this platform to build what we see as the growing applications and ecosystem on top of the Bitcoin and blockchain space. So,
well, since we've been live in the last 27 minutes, Bitcoin's gone up $350. So that's because of you, ladies. Let's switch. Yeah, switch gears for a second. Let's talk about your ETH mining. I know you mentioned 15% of your HUT8 revenue comes from ETH mining, converted directly to Bitcoin. But how will revenue and holdings be affected by the ETH PoS merge, the move to proof of stake? And is that something you're considering? And what do you have planned for your existing business, your rigs? Do you think it will be delayed out beyond late 2022?
Well, I think it's been delayed consistently since about 2017. I think we've seen rumblings coming from the ETH community that suggest it's unlikely that it will come this year. Again, it'll push out. I think the Luna unwind last week has put even more kind of fear into the community. There's so much at stake in that move, and I think there's a lot of work still to be done. So to answer your question, I don't think it's coming in the short term. But one of the things that we love about the equipment that we bought, again, we bought really high-end graphics cards from NVIDIA. We put them in enterprise-grade chassis from Dell, and we know that they're going to be they're going to run for a very long time. We can move them to the next most profitable blockchain. We can put some of the equipment into our enterprise data centers that we just purchased. We have a lot of optionality for what we do with that compute when and if the move to POS takes place.
We also have a tremendous relationship with Luxor Mining Pool for our ETH strategy, and Luxor actually has a service where you can effectively donate hash, and then they effectively deploy it for you, and then would spit out Bitcoin on the end. So, to Jamie's point, we feel very confident that this is still an incredible. That we're still able to be quite agile with these EUs.
And there was rumors that a lot of traditional ETH miners would move to mining Ethereum Classic.
Yeah, we don't think it's just going to die, though.
Yeah.
We don't think that hash is just going to die. We do think it will be deployed to other chains.
Good. So one of the questions I was asked to ask you guys, a lot of people want to work for great companies like yours and get into more of the crypto space. But one of the questions is, what particular skill set does somebody need to land a job within HUT8 or within a mining organization?
Actually, Sorry, go ahead, Sue.
I love this question, and here's why. My background is from the traditional financial services space, and it took me about a year and a half back in 2016 to 2017 to really convince any blockchain crypto company in Toronto to hire me, and that I was, going to be a value add. Because at that time I just looked like another sort of bandwagoner. But I think if you are curious, if you are passionate about the space, there is a role for you somewhere. Not necessarily at HUT8, but somewhere in this industry. The more people, the better, and the more passion, the more ideas, the more curiosity, the better it is, for sure. And if you have those traits, I strongly believe you will find your right place.
Excellent.
We also, in addition to posting our open roles on kind of the normal job boards, we also post on Pompliano's job board to make sure that when we are hiring, that we're in front of the crypto community for anybody that might have applicable or portable skill sets and be part of the crypto or the crypto curious community. And we've found a lot of great talent. Really, every time we post, we have a great influx of good talent. A lot come from traditional tech or engineering, some from traditional finance. And really, if you've done the work of there's so many great online courses available. Obviously, Sailor's got some, Pomp's got some, Cephadine's got some. So even just showing us that you've done the work to educate yourself in the space with some base level skills that apply to any of our open postings or the rest of the community, I know is really bullish on bringing new talent into the space. And I think we're blessed to be in an era where all of that education is so readily available, and it's such good content.
Also, open source systems, one of the beauty of it is that there's so much availability to code and build your own applications or really just show your ideas via code. Code is speech in this industry. So
exactly.
Yeah, it's lots of ways.
In fact, I got my start in this industry by coding on a VIC-20 back in the the mid to late 80s.
Wow,
so
that's
I agree with
interesting.
you.
I had a VIC-20 and then I had a Commodore 64, and that's where I wrote my first code too. Long time. We're going way back in time. Oh dear. Okay, let's switch gears and go back to energy. And one of the things that I like to look at in industries, especially emerging industries, is the whole concept of vertical integration. And now, for the first time ever, well, they've been dabbling for about a year, but now they're coming in whole hog, like the Exxons and Occidentals, etc. They're using flare gas to mine Bitcoin. And also, there are miners that are trying to control their energy sources too. So, where are you guys in this kind of continuum? And do you see yourselves integrating yourselves vertically into more of the energy business, or being acquired by an Exxon or something like that?
Exxon has not called us, so I'm not sure how far away something like that might be. But it's exciting to see them into the space. It's exciting to see them investing in innovation in this space. I think that's good for all of us. I think, as you know, the third site that we're building and about to start lighting up shortly is in North Bay, Ontario. We've done that in conjunction with a Canadian-owned power partner. It's a behind the fence or off grid site. And so I think you're going to see more and more unique, tight relationships between the power providers and the miners. And then that's always been the case for us in the city of Medicine Hat as well, which is an independent power authority within the city, and we all work together and deliver what is needed for the grid and use the power that's sitting idle. So I think there's just a world of different opportunity for various models here. And I don't think it'll be a one model fits all at the end of the day.
Very good. Let's switch gears and talk about China for a second. It's very top of mind with miners that they're back in the game. So a couple of questions are, did they ever leave? Is it underground? Is it the Chinese government? Is it really 21%, or is it people just faking IP addresses? Where do you guys stand on China back in mining?
I think
we have no idea.
Well, I think that what's really exciting about China being back in mining is it speaks to the resiliency of the Bitcoin network. right? You cannot shut this network down. So that's what I think is most exciting for me to see. We've certainly heard, I mean, I do have some contacts in China. I have heard that there have been sort of mini mining operations in people's basements ever since the shutdown, although 21% is pretty extraordinary. So maybe it is the Chinese government, who knows? But the real takeaway for me is the resiliency of this network.
Mm. And do you guys, and this is going off the reservation here, but we're talking about geopolitics with all the goings on in Ukraine, Russia, China, currencies. Do you believe there'll ever come a time when energy will be far more tied to Bitcoin, and there'll be like, instead of a petrodollar, a petro Bitcoin type currency, and trade will happen for scarce resources using Bitcoin as the currency?
I think that's something that's talked a lot about in crypto circles. I think there's been increasing chatter really on the back of what's happened with Russia. I don't think it's out of the realm of possibility. I know a lot of people that think it's an inevitability, but it's really a question of timing and what are the macro backdrop items that take place between now and then. I don't think it's a linear answer, and I really think it's difficult to say.
So me personally, I think that the weaponization of the US dollar is an incredible bull case for Bitcoin, because we were actually in London at a conference, and Nouriel Roubini was talking about this. You now have a potential or a real world likelihood of an East versus West fragmented financial system. But then you have countries like Singapore that effectively need to sort of have their foot in both. And this is where a non-government controlled, sort of government agnostic payment network like Bitcoin, I think, really comes in, and is what I'm very excited about, to see sort of how this Bitcoin narrative plays out as we have a fragmentation of global payment networks.
It's always interesting to me how academic philosophies align, even though they're anti something. Like Roubini is anti Bitcoin, and you guys are all on the same page, but you just
Yes.
don't speak a different language. That's the only problem.
Yeah.
It's so interesting. So,
But it's that language gap that's ultimately going to be the biggest problem or determinant of what eventually happens. Because you're right, we're all in the same room, we are all recognizing the same problems, and we have very different views of the answer.
exactly.
But the nice thing is we're all together and we're all talking.
That's very good. Exactly. And it can be very disturbing when people are overly toxic. Everybody should always be open to other people's ideas, and to keep that open mind, because who knows where the world is going to go. Back to electricity and auto bidder and things like that, like from Tesla. Do you see hash power daily cycles driving kind of an electricity spot market, again, driven and influenced by miners in the future? Like almost minute to minute, miners flick on, flick off, pick up energy based on demand and everything else, and being managed by outsiders like Tesla is trying to do in Australia today. Not for mining, though.
Look, it's anyone's guess at that point.
Yeah, that's an interesting question. I don't know if we have a good answer for that. But that's interesting. Yeah, I don't know if we have a good answer for that.
But
I think it does speak to the beauty of mining as flexible industrial load, and it's one of the most unique things about mining, that we can spin up and down within minutes any portion of our load, all dynamically controlled by software. And
beautiful. And I got two last questions. I know you got a hard stop in 4 minutes, so I'm trying to pack 30 or 40 questions into a short window of time. Second last one is, how will you manage your debt obligations as you go forward while expanding and renewing your rigs, your fleet, as you call it, while hodling Bitcoin at the same time? What is the plan? How tight are you with your lenders going forward?
Jamie?
Did I lose Jamie for a second?
Oh, you might have lost Jamie there.
Yeah. See you
I
later.
mean, listen, it's a fine balance. We are certainly on the lower end of sort of the debt ratio versus our competitors, and that goes back to the fact that because this is not our first rodeo, and we take such a balance sheet first approach to how we run our business, when we raise capital, how we deploy capital. So again, it's a fine balance, but I'd say relative to our competitor group, we are by far, I think, have one of the strongest balance sheets out there.
Yes, you do indeed. That's one of the things I like about HUT8 too. And final question. It's a pity Jamie's not here for this one, but Sue, I'm going to put you on the spot. So a lot of people always want to hear about price predictions in Bitcoin, and I'm sure you factor, like you guys know your financials, you explained, the negative yielding bond market versus market cap of gold, etc. So I know you guys think about this, but do you have a year-end Bitcoin price prediction considering the weak market and a 2030 price prediction?
Okay, so I certainly cannot give one on behalf of HUT8, and Jamie definitely wouldn't have done that either. But Sue, I certainly thought last year that we were going to see a 75 to 100K Bitcoin. Again, when you were looking at just how tremendous the negative yielding credit market was, if Bitcoin were to capture 3%, that's like the very low end that Bitcoin could rally based on those dynamics alone. This year, I think, is going to be hairy. But we're in an election year. So I think November will be interesting. We'll see who comes to the table and tries to sort of save the economy, which I think will certainly create more of a risk on attitude and would be accretive to Bitcoin rallying. So I'm not sure I can give you a number. Maybe I'll put it back to you. What do you think what's sort of your price prediction for the end of the year?
Yeah, it's one of the weird things is over the last 13 years, about 85 to 90 days matter for Bitcoin. That's when all the price action happens. See, when you least expect it, Bitcoin goes up and down. It's just one of those things. So it's very hard to say, but somewhere between, I would say 63,000 and maybe 85,000 would not surprise me. But then again, it all depends on macro factors, where we are, what's happening in Eastern Europe, what's happening with interest rates, what's happening with money printing, QT, QE, all that type of stuff. So we have to wait and see. So I know we had some slight bit of technical problems for the last two questions with Jamie. Oh, there she is. She's back. And Sue, I just want to thank you both. I know you have a hard stop for being here today and really appreciate the time. And I know the audience does. There are thousands watching. And thank you again. Any final questions for me?
All I got to say is keep up the good work. We absolutely love your models. We actually brought them up in one of our management meetings a couple of weeks ago. You do fantastic work. And yeah, Jamie?
Well, it's Jamie. I think she lost the connection, but thank you so much. And I'll keep up the good work too. And look forward to keeping the dialogue going as well. Thank you both, ladies, and have a great weekend. Bye.
Thank you. Bye.